When we talk about the sell-off in emerging markets, we talk about contagion not only between different geographies, but also between asset classes, from FX to bonds and to equities. You have a very diversified exchange.
Exactly.
What's your view on potential contagion from, for example, from a weaker ruble on other asset classes in Russia?
On the one side, if the ruble is weakening, so some of our issuers are benefiting, like exporters, for instance. Weak ruble, high oil prices, it's very good news for the Russian exporters. Secondly, we can tell about higher volatility in FX market, which follows usually some bad news and some bad events. We see that some investors which are getting more cautious are increasingly working in fixed income area and investing in fixed income area. The derivatives today are also on historical highs. So this diversification of the Moscow exchange allows to be profitable and to be interesting for our customers in practically any stage of the economic cycles. I believe that FX and fixed income are the beneficiaries already today of all those events which we are mentioning now.
Do you believe that the government and the central bank have all the tools necessary to withstand any negative impact from possible further US sanctions?
Different to other emerging markets, the macro situation in Russia is pretty well. We have a strong budget, we have a low inflation so far, so I don't care so much about the current level of the macroeconomic. It is definitely some sort of an advantage, and there is also one interesting aspect which unfortunately I do not hear quite often. So Russia is the most open emerging market in terms of the regulation. So there are actually no capital controls for international investors and even for local investors to invest abroad outside of Russia. And no one measure in terms of increasing capital controls, any restrictions was done so far, despite the situation with sanctions, the situation with weaker economy and so on is already there for 4 years. So that's why I believe that the government and the central bank are pretty wise and pretty supportive for capital market development in Russia.
What impact could tightening by the Federal Reserve and tightening global liquidity have on the markets that you have on the Moscow exchange?
I would say, so the tightening of international liquidity is always some sort of a challenge for the equities markets, to some extent for the bond market, but it increases usually in the activities in other areas. For instance, we have a pretty big money market, the repos, and each shortage of the liquidity, both international or local liquidity, increases not only the volumes but also the investment in this type of the markets and of course derivatives.